What is up, guys? Good evening and welcome to Stockwatch Sunday. My name is Brad and this is Own the Chaos. If you've never been a part of Stockwatch Sunday, welcome. Every Sunday night at 8:30 p.m. Eastern Time, I go over the top stocks that I'm watching through the week, and that's what we're doing tonight. So we actually have a lot of earnings going on this week, so I'm going to tell you how I would end up playing those and what to watch out for in the top 5 stocks that I'm watching this week. Now, just to give you some perspective, this isn't a go buy this now type of thing. It's just watch it because it's worth a watch for these reasons, and if you want to take a shot at trading them, by all means, but I'm not telling you what you should be doing, but what you should be watching for. And so we'll discuss a lot of that stuff. Before I do, though, let me just again welcome you guys here. If I could get a thumbs up from you, I certainly would appreciate it. And if you have never subscribed to this channel, subscribe. And what you will learn is all kinds of stuff about the stock market, my points of view on why certain stocks are doing what they're doing, investing, how to trade in the stock market, and so on and so forth. I have a community. It's called WeTrade HQ. You can check it out over WeTradeHQ.com. The links are down in the description below. I would invite you to check that out. It's absolutely free to be a part of the WeTrade HQ community. And, of course, feel free to check us out on all of our social media as well at WeTradeHQ. Go to WeTradeHQ Facebook page. Again, all those links are down below. All right, let me welcome some folks here. What's going on? Quick Fox, Bob, Miguel, good to see you, man. The stream saved me from doing my taxes. Last year I do my own. That's awesome. Not Green Bay. Yeah, I saw that. I saw that Green Bay scored a touchdown just before I went live. But Packers not looking good for the Packers right now. Unless they have some sort of crazy comeback like Kansas City did last week, or maybe even this week. Kansas City was down quite a bit this week and came back and won. Miguel, you cracked me up, man. But yeah, man, I actually had Green Bay and Aaron Rodgers in the Super Bowl with the Chiefs, but it doesn't look like that's happening, man. That San Francisco defense is something else. What's up, Matt Fuller? MN Silver, what's going on? Yes, like button, first thumbs up, nice. Yeah. All right. So the reason that I'm doing Stockwatch Sunday on Sunday, even though the stock market is closed, so I wanted to actually say that first and foremost, that the stock market is closed tomorrow in observance of Martin Luther King's birthday. Lots of times, if you guys have been following me for a while, you guys probably know that I end up doing a Stockwatch Sunday on Monday if there's a holiday that we observe on Monday and the stock market is closed. But I wanted to try to keep this as consistent as possible, especially since I've been sticking to a new schedule where I put, pre-recorded videos out on Monday, Wednesday, Thursday, or Monday, Wednesday, Friday. So again, if you're new, be sure to be on the lookout for those videos and hit that notification bell if you want to get notified every time I put a video out on Monday, Wednesday, Friday, and then also get notified when I do go live on Stockwatch Sunday. So that's why I'm sticking to that, Alan, or anybody else who's been watching this regularly. I know I might be switching things up a little bit, but so far, this schedule has been working out very well for me personally as far as my personal development goes as a YouTuber. So that's why I'm doing it the way that I'm doing this. So hopefully you can understand that, and we'll just move forward doing it that way. So that's awesome, Miguel. Thanks so much for the donation. I really do appreciate it. Says your advice and my skills and my skills make me money. I think you meant skills, but skills that maybe I've taught you, but yeah, it's all right. But nevertheless, I appreciate the donation. Any support is definitely welcomed and appreciated. So thank you so much for that. I do appreciate that. So what are we watching this week? So we're watching, first and foremost, Netflix. So Netflix has earnings that come out after hours on Tuesday. So I'll give you my thoughts and my opinions on what I would expect after those earnings come out and how you should end up looking at that to make potential trading decisions, as well as we'll be watching ETrade. So ETrade has earnings on Wednesday, I believe, so we'll be watching that and why I think ETrade probably won't have favorable earnings. And then we'll also talk about things that are not on the earnings list. We'll talk about FCEL, Fuel Cell, FCEL is one that I know you guys have been probably have been asking me about actually the last couple of weeks and has yet to have been technically featured on Stockwatch Sunday. And we'll talk about some of the other penny stocks as well. Tesla, we'll revisit that Tesla drama. If you guys watched my video on Friday, if you didn't, go back and watch that video on Friday. But looks like my conspiracy theory, quote unquote, actually was true, and that it turns out that perhaps a short seller was the one that started the petition that's kind of sparking all this crazy nonsense about Tesla, having their vehicles recalled or whatever. But anyways, we'll get into that, and then I'll open it up to you guys. So if you guys want to provide me with stocks that you would like me to take a look at and maybe assess or evaluate, I certainly will be happy to do that. So as I'm going along, feel free to put that in the chat if you would like to, share with me your thoughts on a particular ticker that you would like me to take a look at. The only thing I ask is that you don't just throw a ticker symbol out there. Give me some context. Why are you seeing value in that stock? Just so that I have something to go off of, and kind of a direction in which you are going, because lots of times people just throw tickers out there and it's like, well, are you long? Are you short? Do you like this? Do you not like this? Whatever. So give me some sort of direction as to why you see value or not in that particular stock. And I certainly would appreciate it. All right. Okay. Daniel Rosario. Yeah. So I've been doing the OTCs as well. So if you guys haven't been here for a while, I actually split Stockwatch Sunday up into both big boards and OTC penny stocks. There's only one OTC penny stock in particular that I have in mind this week that's worth watching, and that's SWHI. So we'll definitely be watching that as well. If you guys haven't noticed, this channel has been evolving. The reason that it's been growing so much is because I've kind of been broadening my horizons a little bit and kind of touching on subjects that more people are interested in. And at the end of the day, I treat my YouTube channel and I treat you guys as a business. I love you guys. I think the community that we've built has been fantastic, and I want to build that even further. And so sometimes when I was just talking about OTC penny stocks, even though I was within my niche, the niche was a little bit too small and I was having a lot of trouble growing. So I decided to expand a little bit and talk about both. I don't want to, completely leave the OTC or leave penny stocks. I still trade them regularly, just like I would trade them any other time. But being able to broaden my horizons a little bit and talk about these larger cap stocks that other people are interested in has really actually propelled the growth of my channel. And so I'm just going with it. It's brought in a lot of really great personalities and continues to build the community. So that is why you see me talking a little bit more about big boards as well. But never fear, I'm not leaving the OTC. If you have any questions about particular OTC stocks, please put them in the chat. I'll be happy to take a look at those, okay? All right. That's all right. That's all right, Alan. I think you still can, but don't even worry about it, man. You do enough. Okay, let me go ahead and share my screen with you guys. So as per the usual, I'll bring you over to WeTradeHQ.com. Now, again, like I said in the beginning, WeTradeHQ is a community where you can come and learn how to trade stocks. It's absolutely free to be a part of the community, and that's all you have to do if that's all you want to do. We do have an educational. This is primarily an educational platform. So if you want to learn from other veteran traders, you have that option too. We have mentorships. I have my own mentorship, and I'll give you a promo code at the end of this stream if you guys want to stick around. I'm going to give you 20% off of the mentorship that I provide, where I go live with you guys for an hour a day, and then I'm with you throughout the entire day in a private Discord chat as well. I go over the trades that I'm making, how I'm executing them, and why. And if you want to be a part of that, stick around. Check the link down in the description. I'll give you that promo code, and yeah. So anyways, Netflix. So Netflix has earnings after hours. Now, I was actually surprised about Netflix and the analysts that are saying that, earnings are probably going to do well. The reason I don't think they're going to do well, and, again, I could be pleasantly surprised, is that, we had Disney, and let me come back here. We had Disney that, launched their Disney Plus product. We had Apple that launched their live streaming service. And then Peacock was the announcement there. So there's just been a lot of other streaming services that have come into play here. And last I saw, Disney actually pulled quite a few million subscribers from Netflix to their platform. So I would be surprised if Netflix had really good earnings. They're expected to have about 60 cents per share, I think, the last I saw. And so if they don't beat those earnings, obviously it's going to be a rough day for Netflix. They beat earnings last time. And just to kind of give you perspective, they did beat earnings last time and had a monster move. So if you look back here, so this is back in October. This was the move here. So let's zoom in here. You can see this huge gap up where it started to make some really nice moves and then moved way up to 309 from its lows down to 251 after positive earnings. And now we've seen this go as high as 346 since then. And I think this is a little bit overextended, if you ask me. I don't know why this is moving as high as it is. And I think that even if they do have positive earnings, that maybe this might be a little bit overblown. Now, again, I could be surprised and this thing goes off. They have great earnings. They're just blowing everybody out of the water. Fine. I mean, there is something to be said that Disney Plus, a lot of these other streaming services still have their subscribership in just the U.S., whereas Netflix is very global. So maybe that, plays a factor. But for me personally, I think that Netflix is probably going to have a tough day. So given the fact, though, that most of the market is positive on this, I would probably venture to say that on Tuesday, running up into the earnings call, that this probably ends up having a good day. So it's holding a very nice support here at 335. So look for it to hold that support. If it doesn't, then this may actually end up turning into a nice short play earlier than expected. But I would venture to say that it's probably going to try to close this gap all the way up to maybe 360. And I don't think it's going to have that strong of a move right out of the gate. But I think that if they have good earnings, that we could see a move to 360 and probably would with very little effort. So the thing you have to understand about earnings is that if you try to play a stock, into the earnings play, in other words, if you bought Netflix on Tuesday when the stock market is open, and you held through after hours, and then they came out where after hours, the earnings were great, and you actually shorted it, you're going to get burned, right? So earnings plays is always a crapshoot for the most part. It's just a guess. You're just playing the lottery at that point. So if you want to throw it on black and say, you know what, Netflix is going to be bearish, I know they're going to miss earnings, and then, it doesn't go your way, at least you went in it with the expectation knowing that, hey, I knew that this is probably a possibility. I'm going to manage my risk, yada, yada, yada. You know the drill if you've been trading for some time. But I think that Netflix actually doesn't end up having a good earnings report. And I think a lot of that just has to do with the fact that there's so many other players in the market now that are, especially with Disney Plus. And I would be surprised, and this is just long term. This isn't just after this earnings report, but I think long term, Disney owns so much stuff, right? They own ESPN, they own ABC, they own a lot of these other companies. What happens when Disney Plus decides to do live streaming of sports and all other major network type shows? I think that Netflix long term is still in trouble unless they do something to combat that, because a lot of these other streaming services are offering live streaming events such as football or baseball or whatever. So I think that could be the direction in which Disney might end up going to try to be still competitive and have that competitive advantage. So long term, I still think Netflix is way overvalued up here unless they do something crazy. I mean, we'll see. Especially if Disney starts getting into, and Apple starts getting into, global markets as well. So, but anyways, for this specific earnings play, look for a break to 360 if earnings are great. Look for a breakdown below 335 and then beyond. The next area of support would be, if it has poor earnings, would be right here at around 319, 320. We'll call it 320. So look at 320 for the next area of support. If it breaks that support, I would continue to short this. You can see that 320 is a pretty strong support level, and then it would probably end up breaking down below that if earnings are not good. So my outlook on Netflix is going to be that they probably don't beat earnings and they probably don't beat expectations, but we'll see. But that's kind of how I'm looking at Netflix. Again, positive earnings, look for a break to 360. Negative earnings, look for a break below that 335 down to 320, and then below that if it ends up kind of breaking that support and seeing where it might end up. So that's my play on Netflix and why I'm going to be watching that this week. Let's see here. I guess just checking in with you guys. Miguel, hey. Oh, Miguel's thrown. You guys are awesome. Thanks again, Alan, or, Alan on behalf of Miguel. So, yeah. Or Miguel on behalf of Alan, whatever you want to call it. So, thanks again, guys. Bob said San Francisco scored 33-7. Yeah, that game's over. Good for San Francisco. All right. Next stock's going to be AMD. So AMD was one that we had on Stockwatch Sunday last Sunday, and I believe the Sunday before. This is one that I'm really, really bullish on. I told you guys last Sunday, and this was, way back here, that, and actually it was $48, I want to say. When was last Sunday? Let me look at my calendar, my trusty calendar here. The 12th. So if we go back to the 13th, and you can see I had it on Stockwatch Sunday back here at 48.26. I told you guys that look for that break over $50. If it breaks over $50, just very much like Tesla broke over $500, that it was going to have a very strong move. Sure enough, consolidated around here very nicely in the beginning of the week, and then just had a monster move. A lot of this was because of the overall markets were doing very well, but AMD also moved with them, and then it finally broke that tough resistance over 50 and then just blasted off. I mean, it was just an amazing move, really, really nice move with AMD, and I would venture to say that this might continue, but now $50 has become that new support. So look for it to come back down, maybe have a little bit of a pullback. You can see that $51 is now the new resistance. So if it breaks up over $51, there's a pretty good sign that it may continue if it breaks over that previous high. But look for some sort of pullback. And maybe this pullback had already happened. This is on the 5-minute chart, by the way. So if we look at this pullback that already kind of happened a little bit, bounced off around that $50.50, if you will, and started to make a move back up towards the end of the day. We'll see if this actually continues. Not positive that it'll break back over 51 just yet before it comes back down. So just be on the lookout for that. Again, a break over $51 will probably indicate that this might continue, and then a bounce off of around $50 flat, or maybe even $50.50 could mean that it could move to newer highs if it bounces off of that. So be on the lookout for AMD. It was really great to see this move up over $50 and have that strong move just as we anticipated it. If you tuned in to last Stockwatch Sunday, really, really great move. I'm checking with you guys. I'm just going to check in with you guys every now and then. Luis, I see you on Alta. You don't have to keep putting it in there, big guy. We can take a look at Alta, but again, give me some context, man, if you don't mind. Okay. Moving on, is going to be another earnings play, which is ETrade. Now, here's the thing with ETrade. So as you guys know, there's been, this huge, free commission war going on with all these other brokerages, and Charles Schwab was kind of the really big player in this. Now they've gone on and have acquired TD Ameritrade, which is another monster move, and that leaves ETrade, a lot of the other free commission brokerages, Robinhood, Webull, all of these other ones, even Interactive Brokers, they're all in trouble now because you have this two-headed monster that is Charles Schwab and TD Ameritrade that is now in competition with all these other smaller brokerages. And Charles Schwab, interestingly enough, they missed earnings, which is what I think ETrade is going to do. They're going to miss earnings. They're going to have poor revenue because of this pre-commission. There's no way around it. They're going to have a poor quarter in the fourth quarter. But Charles Schwab actually did really, really good after earnings because, and I'm going to bring you over to Charles Schwab actually. Let me, what was I going to do? Yeah, let me share my screen here. I'll pull it up on Thinkorswim here. I already have Thinkorswim up. Hold on. One second here. Let me get this pulled up. There we go. All right. So we'll do Charles Schwab. Again, if you don't, you can look this up however you want on WeTrade HQ if you would like. But Charles Schwab actually did pretty well on their earnings and actually ended up moving up. The reason being was because they actually had more funds coming in. So they had more accounts coming in to Charles Schwab. In fact, if we go to the news, I bet it's probably on here somewhere. Pull the plug. So here it is. So again, this is a really nice thing you can do on WeTrade HQ. So they did really well though on the stock all around because of the amount of accounts they had coming into Charles Schwab. So even though their earnings weren't all that good, the outlook is even better. So that's why it ended up making a move here, which actually to me tells me that if there's accounts moving into this stock, this is when earnings occurred, and you can see how it's just gone straight up since. So actually, I'm sorry. Here we go. This is when earnings occurred, and then it went straight up. Had a little bit of a pullback here, but the reason that it's moving up is because of the amount of accounts that are moving into Charles Schwab, the amount of funds that are pouring into this company have been quite considerable. And I think a lot of that is because, again, I'm going to come back here. I think a lot of it's because Charles Schwab, when they went free commission all across the board. Even TD Ameritrade still charges you to trade things like OTC penny stocks, and still charges you a certain amount for options and stuff like that. ETrade, same thing. They will charge you if you want to trade OTC penny stocks. They're still charging you the $4.95. No, the $4.95 or $6.95, whatever it is. They're still charging you commissions to trade those penny stocks, and so that's been the hang up. Well, there's been a lot of people going to Charles Schwab because their customer service is that of like Chick-fil-A. It's freaking awesome. They're just extremely nice, almost kind of creepy nice, but nevertheless, they're super nice. And so, it's one of those things where E-Trade's going to have a hard time because most of their revenue comes from online trading. And when you take the commissions away, it's going to be bad news for them. And the fact that Charles Schwab is now bringing on all these new accounts, and then they're also bringing on TD Ameritrade, it's just going to be really bad news for E-Trade. I don't know if it makes sense for E-Trade to get with somebody like Robinhood. I don't know what that was about, but get with somebody like Robinhood, and where Robinhood has this great app, and then E-Trade has great tools and resources to help somebody actually trade, where Robinhood is pretty worthless in that matter. Robinhood has a pretty looking app. It's easy to use. That's why it appeals to millennials, because it's something that's really easy to use, and it just appeals to what it is that we're all kind of about. I hate to be lumping myself into the millennial stuff, but anyways, I think that's the only saving grace for E-Trade, is that if they get with somebody like Robinhood, where you have some powerful resources that can educate and as far as a trading platform is concerned, and then you have easy to use app that you can trade for free. Everything's free now. So then if you bring that kind of volume in, that's how the companies like E-Trade and Robinhood are going to win, is that they can just bring the masses in. You need to bring units in, is what you would call that in business. And so the competition now is just bodies. You got to have people in there making trades, because now the only way that they're making money off of trades is order flow. So the more orders you have, the more money you make. And now with Charles Schwab taking over TD Ameritrade, you have this huge monster over here. They have all kinds of orders coming in, so they're going to be making tons of money, where you have these smaller ones now that are struggling because they don't know how they're going to be able to profit with the small amount of users they have. And I know it sounds crazy. Robinhood has 10 million users, but that's nothing. I'm telling you, it's nothing compared to what Charles Schwab and TD Ameritrade are comprised of. So 10 million is a drop in the bucket compared to those guys. Something's got to happen. That being said, E-Trade's going to have a rough go at it, I think. If we go to the daily chart on this, you can see that it's made a nice run up. You could see this is the huge gap down when the free commissions were announced, because everybody knew that this was going to spell trouble. This had a nice little recovery up to $46, $47, even as high as $47.88. For a fact that they're going to have a tough time, that the earnings are not going to be good. So I would venture to say that probably a break below 44.96, I would be short on this. This would be one rare instance that I may even consider holding some shares overnight into earnings when this comes out, because yeah, you just kind of have to know that this is going to be one of those things where it just ends up tanking. I don't think earnings are going to be good for ETrade at all for the fourth quarter, and so that's going to be. That's my little spiel. I know it's a little bit wordy on that, but I wanted to kind of give you some context as to where I was coming from on that. Voucher on Schwab customer service. Yeah, Ryan, Schwab customer service is pretty banging. TD Ameritrade also has earnings on Tuesday. Yeah, same thing. Daniel, TD Ameritrade, I would say TD Ameritrade ends up having a bad day too. So I would be, I would be bearish on just about all that. P&G, yeah, they all have earnings reports as well. Listen, so I'm just covering the ones that I'm covering, but you guys want me to cover some of those, I'll be happy to do that. If Charles Schwab takes over, will all fees be waived? Matt, I'm not sure. That still has yet to have been hammered out. So, it all depends. So there you have it so we have Netflix, AMD, and ETrade. Next one is going to be Tesla. Now, actually, you know what? As far as earnings play, let's get the earnings plays out of the way. So FCEL, if you guys have been talking about FCEL for a while, I've had a lot of people asking me about FuelCell. So FuelCell Energy, who are they? What do they do? So they are an energy company. More importantly, they're involved in like the battery business, and a lot of other stuff. FuelCell Energy, as of recently, announced regaining NASDAQ compliance in fourth quarter and full fiscal year. Financial results, a conference call on January 22nd, which is Wednesday. So this is one that I would be on the lookout for. As you can see right now, it's classified as a penny stocks at $2.40. This has some really nice moves, in particular as in response to a lot of what's been going on geopolitically with Iran and stuff. Had a crazy move. Lots of other reasons why this one's moving too, but don't expect this to have good earnings. It's never had positive earnings ever in its entire life. The only reason that I think people are hyped up on this is because they're finally getting their act together when it comes to filings and that sort of thing, and their NASDAQ status. So yay for FCEL for being able to stick with it, and remain on NASDAQ and not become an OTC, but that's just it. They're just barely hanging on by a thread financially. I think the outlook for FCEL is positive. Long term, maybe this actually ends up turning into something, and maybe they end up working with a company like Tesla, or another, energy storing company, because Tesla has, battery storage, that they need companies like FCEL for, or maybe Tesla just ends up creating their own, which is very possible. But you can see this one's kind of just been hanging out here. It's come up and touched 243 several times, and it's gotten rejected. And then, so right now we're back up in that area. So I think, though, there's enough hype on this that we see a move above 243 and maybe even tests that 291 high before earnings come out. So earnings come out on Wednesday. Be on the lookout for this, though. I would not be in FCEL if it were me. Now, if you want to take a chance on FCEL and play this through earnings, that is your prerogative. You have every right to do that. I'm not going to tell you not to. But if you're going to ask me what I would be doing on FCEL, into earnings, I would not be anywhere near this once those earnings come out, because I wouldn't say I guarantee you, but I have a very strong suspicion that this is not going to be the earnings that everybody's expecting it to be, but they're just going to be earnings. They're going to be earnings that you probably will come to expect for a company that's trading at $2.40. So you have a company like this, and then Plug is another one that's related to FCEL. So Plug also, struggles to stay afloat financially. So we can look at Plug. This is another one. Same area that FuelCell trades in. And you can see that, this one's at 417. So, I mean, this kind of technology, energy generating technologies is good. And I think eventually one of these companies is going to really take a hold of the industry and do very well. But I just don't know if it's going to be either one of these companies, just because they have so much debt to dig out of. So don't expect anything from FCEL. But, if you're going to hold through earnings, just understand that what you're getting yourself into. That's all I would tell you. And at the end of the day, you're just putting it on black. And that's how I would treat all of these stocks. That's how I would treat all these earnings plays. If you can afford the risk, if you can afford losing money on these stocks, then don't play them. But if you know that, hey, there's a possibility that I could lose 30, 40% on a penny stock, or maybe 10, 20% on something like Netflix, or, even ETrade, then knock yourself out. But as long as you go into it knowing that there's risk involved here, even more so than any other time, then that, again, that's your prerogative. But I'm presenting you with the opportunity, and if you want to take that opportunity, that's completely up to you. So that's my thoughts on FuelCell or FCEL, and that kind of does it for all of the earnings plays. Let me check in with you guys to see how we're doing. Hedge if you're long. Yeah, you could always hedge. If you're into options, you could do puts and calls, hedge that way. AMD has been a monster, Kenny, absolutely. SPY, you know what? There's no reason for me to think that SPY is going to do anything other than just go up. I'm sure it'll have, a day or two of consolidation, but I think that the week ends up green. There's no reason to believe that it ends up coming down unless something crazy happens. But technically speaking, there's no reason to think that SPY is going to come down. All right, so Tesla. And then we'll get to the one OTC penny stock that I'm watching this week that I think is probably going to be the biggest mover of the week. There's probably some other ones, but again, if you guys want me to take a look at those, I'd be happy to do that. But the last one's going to be Tesla as far as big boards are concerned. Tesla, here's the thing. Remember when I was telling you guys, look, if you guys went back and watched, or you should go back if you haven't watched Friday's video that I put out about this hit piece, or that, there is the National Highway Transportation Safety Administration. Man, that's a lot of words there. NHTSA, got a petition from some people that own Teslas that said that there was, their cars or their vehicles were accelerating unexpectedly or unwanted. And so now there's a petition of 127 people. Check this out. So, got this from Clean Technica. And so, Tesla short seller Brian Sparks reportedly does not own a Tesla himself. Nonetheless, he has collected claims of SUA in Tesla vehicles and submitted them in a petition to the NHTSA. This is something anyone can do to ask that a matter be investigated. I'll leave you to try to determine why such a person would do that when they don't own the vehicle in question, but do short the company stock. So this guy is a short seller of Tesla, and he's the one that submitted the petition. Now, the thing is about the NHTSA is that anybody can submit a petition. You, me, anybody, and who's anybody can submit a petition on anything they want for any reason they want. And then so what happened was, I know this, and I told you guys that I'm not trying to sound like a conspiracy theorist because I'm not trying to be that guy, but I said I don't feel right about this. This smells like something's up. Sure enough, looks like it is. This Brian Sparks guy, I'm sure he probably has a lot of money in this short. A very respected trader that I follow, Guy Gentile, has been like, he must be burning his ass on this because he's just been flooding his Twitter feed with all this negative Tesla propaganda. So like all these shorts are scrambling trying to figure out how to get this stock to go down, and so they just decided to throw this at it and see if that actually ends up sticking. It's so much so that Bloomberg ends up putting out a news piece on it. But it's 127. I mean, it's like I said on Friday, I have 127 friends, that I probably could just get to throw a petition together. So, somebody who's not even a Tesla owner puts out a petition, but is a short seller. You do the math. Go to cleantechnica.com. Cleantechnica.com. They made that discovery. They're, reputable media outlet that discovered that. So Brian Sparks is his name. Go look him up. So anyways, moving on to looking at Tesla. And if you're interested in trading Tesla, we can still look at this technically, make those technical plays. If this happens to come down for whatever reason, not some bogus reason as to why somebody would want to, some bogus reason like that, like the NHTSA petition. But barring that happening, you can see that there's a pretty strong support right at 500. This was on. We talked about this on Stockwatch Sunday. Hilariously enough, it closed Friday at 473. I told you guys that if it went up over 500, that this would have a monster move. Sure enough, it did. 547. Somebody in this Stockwatch Sunday chat actually said that it wasn't even going to hit 500 last Sunday, and then it moved almost $100 after that, which is pretty hilarious. So, needless to say, I'm still very bullish on Tesla. I think it still has a really nice move in it, especially once we get this crap out of the way, this drama from the petition or whatever. And so look for a move up above 515. I think that's a pretty strong support or resistance area for it right now, 515. And then the support is around, I would actually say it's probably below 500, but 500 is the, kind of mental support area just because it's $500. But it did dip below $500 and then came back up, closed out the day strong on Friday. So we'll see where this goes. But I think that it has a pretty strong support or resistance over 515. If it breaks up over 515, we should see much stronger moves. Who knows where it goes after that? It looks like maybe if it breaks over 515, maybe it can get into like the 530 range and then 535. So those are the areas that I would be looking for as far as supports and resistances are concerned. But again, I stick to my principle about shorting Tesla and how that is not a good idea. So anybody who is short on Tesla, sorry for your loss, but that's probably what's going to end up happening. You want to lose all your money? You go ahead and short Tesla. But again, that is my humble opinion. All right, before I move on to the next one. Thanks, Jennifer. Jennifer Lynn made a donation to the channel. Appreciate the support and the love. Love you too. Happy to have you. All right, so let me check in with you guys just to see what we got. I'm talking about Tesla. Conflict of interest. Listen, conflict of interest, that's for sure. If you short Tesla this week, you'll get burned. I think if you short Tesla at all, you'll get burned, but anyways, it's going to 600. I would venture to say that it probably does go to 600, probably before long. So if you're going to short Tesla, do it with the way of money calls. Very dangerous, regardless. Salisa, I think that's how you pronounce your name. I would agree with you. Look, you could make the case for, shorting this for like some sort of quick scalp play. Like if you're just trading on the 1 minute chart or the 5 minute chart and you're quick in and out, that's one thing. I'm talking about these people who are just in short for it, swing trading this or swinging this for shorts. What do I want to say? If you're holding this long on a short play, it's probably not going to go well for you. Or if you're holding puts, with the expiration out beyond, I don't know, February or whatever, past earnings. That's the other thing. We have earnings coming out on Tesla, not this week, but next week. So it's going to be a bloodbath for anybody who's shorting this. So I think they have incredible earnings coming. Everything's pointing towards them having really good earnings next week. So you can bet Tesla will be back on Stockwatch Sunday, but next week, and for obvious reasons. But this thing's going up. I really strongly believe that for a lot of reasons that I've already kind of talked about already. So, all right, last one I'm going to talk about again is a OTC penny stock. So let's go back to Thinkorswim. I couldn't pull it up on WeTrade HQ. So just to kind of give you a little heads up here, the OTC market has not been kind to us as far as us being able to provide information on WeTrade HQ. So the thing of it is that, let me bring myself back to you guys. So the thing of it is that we're not able to show chart information now if it's an OTC penny stock because of the OTC markets haven't been really nice to us. So, is what it is, but that's the gist of it. So I have to show it to you on, why is it not, my hotkeys aren't working. So I'm going to have to do it the old-fashioned way. Let's do it this way. So SWHI is a merger play right now. Rumor has it, and again, we've only gotten confirmation through emails, things that I've seen, and I can show you that as well. But SWHI, now if you guys aren't used to trading OTC penny stocks, The biggest catalyst that you will ever see on an OTC penny stock is mergers. Anybody who trades OTC penny stocks, they're always looking for the next reverse merger. So if you're not familiar with what a reverse merger is, a reverse merger is going to be, I don't know why I even switched back, because I should probably explain this too. But a reverse merger is, let's just say that you're a private company and you want to go public, but you don't really necessarily have the funds to go through an entire IPO, because the IPO costs a lot of money, and there's a lot of red tape you got to go through an IPO. You may want to take over an existing shell company, like a company who maybe hasn't had a whole lot of business and they're just dormant. They haven't done anything for quite some time, and you could do that in what's called a reverse merger. Now, that's the basic explanation of a reverse merger is, but when you have a company that's valuated at, maybe a few $100 million or whatever. Last biggest one I think we saw as far as reverse mergers are concerned would have been a DevMar or DEVM. That was a really huge reverse merger. It was a $500 million company that reverse merged into a shell company. That was a giant one. This one could yield to be that as well. SWHI. We'll see once we see more confirmation of this merger actually happening. But I wanted to show you what I look for when I'm trading OTC penny stocks. So you're looking at the chart here. Obviously, you can see it came from double zeros, and now it's starting to threaten to get up over a penny. And so I think that if it can break up over 007s here, that we should see a nice continuation. You can see a really nice little stair stepper pattern here. Momentum looks great. RSI is pretty steady on a 5-minute chart. So this looks pretty good. There's a really nice trend here forming on SWHI, and I think this is going to really continue. Should be good. The other thing that I look for when I'm trading OTC penny stocks is this. So I'm going to go look at security details. I'm going to look at things like share structure. So I want to look to see, what the share structure looks like. This has a really nice looking float, really nice looking OS or outstanding shares. And so this one, for this price point, not bad. And so if this actually ends up becoming a reverse merger, which it looks like it is, by this company called Next Dynamic, they're a small arms company. So they make things like, ammunition, small arms ammunition, that sort of thing, supposedly. But all we have, and this is a very rare instance that I pull something like this from Investors Hub, but this had all the information I needed. So, you can see that this is an email that somebody had sent out. Actually, several people, reputable people, have sent out to the CEO of Next Dynamic, and they've gotten positive responses that they are, entering into a reverse merger with SWHI. So this is why this is getting kind of hyped up. But be cognizant of the fact that this has already moved several 100%, right? And, so you understand the risk in getting into something that came from 0009, and now it's up to 007. So knowing the risk is, something that you should be considering here. But I think that if this merger actually ends up going through, and it really is the real deal, that we should see a really nice move well beyond a penny. I traded SWHI back when it was like cryptocurrency, related. And then come to find out that the current CEO was just this 80-year-old dude that had no idea what cryptocurrency was really. And he had like 2 employees back in Texas. So anyways, that's the last time I actually ended up trading SWHI. But it looks to me like this actually is going to be a real thing, that this merger is going through. But again, understand the risk of it going up as high as it has. Understand that risk there. Also understand that this reverse merger could not be a thing. Maybe it falls through. Maybe it isn't even all that real. The Secretary of State through Texas that people have shared, it looks as if it is real. But again, I always have to leave those options out there, because you just don't know until it's done and it's ready and it's there. If we get confirmation that, yes, indeed, for a fact, this is a merger, filings and all, some sort of PR comes out that's reputable, then this thing will go off. So then if that be the case, then this is still very early stages of that catalyst appearing. So if there's some confirmation, some legitimate confirmation in the form of a press release or a filing that, yes, this merger is indeed going through, this could probably go to multiple pennies. So given this price point at 007, that can make for a really, really nice move. All right. One life, one chance. Can you please explain to me why anyone trades these stocks? It's because of the percentage, man. You trade something at 0009 that goes all the way up to 007. That's 800%. Why wouldn't you want to trade that? If you can afford the risk, why not? That's why I trade it. That's what landed me in this spot right here. I traded OTC penny stocks, and I was able to do it for a living and quit my job. For that kind, for looking for stuff like that. That's how I got my start. That's how this channel came to be. And that's why I still go over OTC penny stocks. So I know it might seem kind of weird if you're newer and you're coming into this channel and you're like, well, wait a minute, you were just covering Tesla and you were just covering, Fuel Cell, or you're just covering AMD and Netflix. Why would you talk about this? And that's why, because I think that there's opportunity for everybody in any sector. And if I've already become a professional trader at OTC penny stocks, I still want to leave that option out there for people to learn from that. And then if that's not your game, that's cool. I got this too that I've also become successful at day trading some of these other bigger and larger cap stocks as well. So that is why I cover both. And might be unique, might not be your style. That's fine. There's plenty of other YouTubers out there. I would hope that you would stay, but I'm going to stick to my guns here and just talk about the things that I know that I'm good at. So that's why I do what it is that I do. So OTC make you rich. And some cases, you put $1,000 in something and it goes 1,000 or 10,000%, which we've seen it happen. It could make you a very rich man, but those opportunities don't come too often. They do come, but not often. All right, let me scroll back through here. There is a love-hate relationship with the OTC. That is for damn sure. That is for damn sure. The OTC market it's been rough, and that's another reason why I've kind of branched out a little bit, because the market itself has not been good. Not a whole lot of volume really to speak of, and most of the other, most OTC penny stocks are pump and dumps anyway. If you really want to get down to it, but this like straight up, straight down crap in 10 minutes has just been killing the market. At least when you see something that goes up and it has a really good catalyst behind it, and a good amount of like traders that know how to hold a penny stock, you'll see it gradually move up and then eventually sells off. But it's not straight up in 10 minutes and straight down 10 minutes, and that's kind of been the theme lately in the last 6-7 months of the OTC market. So it's been tough sledding. So is what it is. That's why you adapt. And you gotta do what you gotta do. So let me see here. So I saw somebody talking about Alta. I'll get with Luis. He asked me about Alta a couple times, so we can take a look at Alta here. So let's pull up Alta on WeTrade HQ. So Alta, if I recall, now I've been watching for Alta for a while, but it looked like it had a really nice move up over the last, week or two. Let's see here. Let's pull it up on a 30-minute chart. Yeah. Oh, yeah. It's had a really nice move. So Alta had really good earnings back here. I want to say actually in December. I think it was December, had really good earnings. Yeah, it popped up off these earnings and has continued to have a really nice move. And then you can see that's been bleeding down here over the last couple of days. But I think it's probably because it's been pretty overextended. So if you're looking at this from a chart perspective, you can see that this gapped up last week. And it looks as if it might end up trying to fill this gap. So before this actually ends up turning back, I would not be surprised if it came back and tried to get close to this 267. Right now it's at like 270. And maybe this is the bounce here. So we'll see where this goes. But as far as Alta is concerned, there's not really like any definitive pattern that I'm like, oh, yeah, this looks like a really good spot, right? So you just have to look for supports and resistances. Right now I'm looking at a support that has already been broken. But if it can get back up over this resistance at 273 and a half, and maybe it ends up continuing that way, that would be a nice little sign that maybe it's bouncing from this gap fill. Other than that, I don't really see any like positive pattern that makes me say that, yeah, I want to get into this one way or the other. You can see on a 30-minute chart that it's not looking good. It still has a pretty strong downward movement over the last couple of days. So, I don't know. I would wait for a move back up, a confirmed bounce if I was going to go long on it. Other than that, I see that you can create, if you wanted to really just create a trend line. That's all you have. There's really no other pattern here. But this trend just looks like it's not going nothing but straight down. And until it starts to make some sort of reversal and break this trend, that's what I would say that Alta's heading towards. It's still going down. So unless it breaks this trend, it's probably going to continue to go down. If it breaks this trend and breaks up and up over 273, 274, maybe this has a nice little reversal in it. But that's how I would view Alta. I'm not really seeing a solid trading opportunity on this one for me personally. But again, I want to make sure that I'm giving you a good perspective on what I'm seeing, and you can make your decision from there. All right. Hope that helped. Let's see here. Do I upload my trader view to my followers? One Life, I'm not sure what that means. But this stream will be uploaded once it processes. It takes like 20 minutes or something like that. Yeah, Rod, no problem, man. Like I said, I'm never going to leave the OTC. As long as there's opportunities in the OTC stocks, I'll still cover those on Stockwatch Sunday. You bet. Do you play earnings with shares or options? Usually shares. I still haven't quite gotten comfortable with options to be able to speak on those from a professional level. So, I just haven't been consistent enough with options to be like, yeah, I can speak on those. I can give you, solid, information. I'm just not there yet. So it comes down to preference. I've talked about this before that, I just do what I'm good at. And then that's what I speak on, and until I get good at something, I'm not going to speak on it. So that's why. If anybody had any reason as to, any questions as to why. Yeah. Okay. Let me see here. Don't forget to cover Alan's MILV. Okay. Thanks, WeTrade HQ admin. Alan says MILV has been a slow mover, canceled RS, reverse merger coming. So MILV, this has been a tough one. So MILV, they had custodianship is I think it's Dave Lazar's on this one. So if you guys aren't familiar with how OTC penny stocks work, MILV was a shell. And, I forgot. I can't pull this up. We'll look at it here. Let's pull it up on Thinkorswim here. MILV is a shell company. So what I mean by that is that they haven't had any business. It's just a dormant company that's publicly traded, but there's no business going on. So it's a shell. So this guy, his name's Dave Lazar. There's plenty of other guys that do this. Their business literally is buying up these shells or taking custodianship over them and turning them into reputable candidates for reverse mergers. And so that's what MILV is. He's got a couple other ones, PFMS, so on and so forth. This one came from triple zeros, I believe. I think it was triple zeros, and then has now gone up over 01. So really, really strong move on this one. Let's see if we can go break this out. This chart looks so ugly when it's, so here we go. Actually, it wasn't triple zeros. PFMS came from triple zeros. So 0023, when we first talked about it over the summer, had a really strong move up over 01. I'm no longer in MILV, Alan, but nevertheless, it's been making incredible moves here. And so maybe there's a chance, when they cancel that reverse merger, this is probably why this moves so well. Now it's just a waiting game. So if you look at MILV from, a share structure standpoint, you look at this and you can see that the share structure is quite large now that we're getting to up over a penny. When you get up to over a penny at this point, you're looking at a share structure that has over $1 billion in the OS. I don't know why they would have canceled the reverse merger, to be honest with you, unless they plan on taking some of these shares and putting them into treasury. I don't know. We'll see. I think eventually they're going to have to do a reverse merger at some point. But, hey, maybe they were just making people happy by canceling the reverse merger. We'll see where this goes or canceling the reverse split. We'll see where this goes as far as a reverse merger candidate, but that's going to be the next catalyst for it. Waiting around for some sort of filing that signifies that they're going to be, a merging candidate coming into MILV. So, Alan, I say if you've been in MILV at this point and you're already on free shares and you're happy with the profits that you've already taken from MILV and you want to see how this plays out with the shares that you do have, I say go for it. You've already made money on this, and I know that you've been in this for a while because you're in my mentorship. So, if you already have free shares of this and you've already taken some profit off of the table, I would say, you know what? Maybe let's hold on to some shares and see what this merging company ends up doing. That's how I would play it. That's how I would play all of my penny stocks like this. I get into something that's really, really low on the potential that something like this can happen. And then, I protect my initial investment. I lock in some profit, and then maybe I hold on to some shares to just kind of see what happens next. I like to see the story play out. And right now, MILV's story isn't over. So if you held on to some shares and you want to see where the story goes, then and you've already made money on it, there's no reason why you couldn't hold on to them. So I think maybe it ends up having a nice strong move if a merger candidate comes into there, and that's how I would play that. So hope that helps, Alan. Buddy says NNRX, they're expecting a big year in 2020 with new partners and possible merger. Are they legit, or are they just a pump and dump stock that already got pumped last year? NNRX, buddy, yeah, I hate to tell you, they have a lot of shares that they just can't stop dumping into. It's a lot of toxic debt, a lot of dilution going on there with NNRX. So don't expect anything from them unless they all of a sudden decide to turn the faucet off. Otherwise, they're just going to keep diluting into that thing, and it's not going to go anywhere. So, are all good OTCs good to swing or just intraday? For me personally, if I'm buying into OTC penny stock, it's because I'm buying into it and I'm going to swing trade it. I've never made good money, and when I say good money, I'm talking 5 figures plus on day trading an OTC penny stock. Reason for that being is because when you can hold on to something at a 0009 or 002 or whatever and accumulate a position, and then watch it go off because you've accumulated that position over time, that's when the big runners come. I've made $20,000 plus on stocks by swing trading them. Getting in and out of a penny stock is hard enough as it is intraday. Trying to get out of a position that's $20,000 large or higher is almost next to impossible to do that as a day trade. So for me personally, if I'm getting into OTC penny stock, I'm into it to swing it, and then gradually work my way into position, and then gradually work my way out. That's probably another topic for another conversation as far as my whole strategy is concerned. But just know that I'm never really getting into OTC penny stock to day trade it. That's pretty much all there is to it. You're not going to make real money, and I'm talking like I said, real money. Change your life money if you're just day trading penny stocks. Period. So. SBES seems like it has shed some weaker hands and past week consolidating upwards. So we've talked about SBES on this live stream before. SBES, again, it's just a waiting game. We're just waiting around to see if this merger goes through. I've talked about it at length, so I don't want to go into it a whole lot. If you want to go back and watch some of my other previous Stockwatch Sundays, by all means. But yeah, I still think that SBES has potential. We just got to get the confirmation. So at this point, again, it's just a waiting game. We're just waiting around, man. So if you still see value in SBES and you want to hold on to it, more props to you. The thing of it is, the longer this takes, the worse it's going to be for the performance of the stock. So hopefully something happens soon, but we have no timeline on when that happens. So just go into it with that understanding. If you've managed your risk appropriately and you know what the risk is, then I've done my job, and you know what to expect. So that's it for SBES. Alrighty. I think that's it. Is that it, guys? All right. So that's going to do it for me, guys. So as always, if I missed your stock, okay? If I missed your penny stock or the stock that you wanted me to watch, leave a comment when this goes back up. So in about 20 minutes or so, or if you're watching this at a later date, leave a comment down below. I reply to all the comments, every single one. So if you want me to take a look at something that maybe I missed, or if you're watching this at a later date, you want me to look at something that maybe I didn't cover, please put it in the comments. I'll be happy to talk about it in, at a later date. I usually respond within 24 hours, so just give me a little bit of time to respond, but I will respond. So if I missed out on that, also I want to give you, football. Hold on. Is the promo code. I promised you guys that. So promo code for the mentorship, if you guys want to check that out, that is going to be the coupon code for my mentorship. It'll give you 20% off. If you guys want to check that out, feel free to do so. No pressure. Nobody has to, but I always like to give out that discount every once in a while just to see, or, just to, let you guys know that I do give them. So if you want to get 20% off the mentorship, where I go live from 9 a.m. to 10 a.m. Eastern time, I go over my plan for the day, how I plan to execute my trades. Sometimes you see me execute those trades before I go offline. Other times I'll let you know when I do actually execute them. I don't like to try to pressure myself into making it in that tight window, because if the opportunity is not there, it's not there. But you might see me make trades during that live stream. But then also I'm with you guys in a private Discord room. You can ask me questions. We have a fantastic community. And so if you want a 20% discount, put that promo code in over at WeTradeHQ.com. And after you're done clicking on my mentorship, and you get 20% off. The links are in the description, so if you want to go check that out, I certainly would appreciate it. And that's going to do it for me, guys. Again, give it a thumbs up if you got something out of this. If I covered your stock and you really learned something, I certainly would appreciate it. It just helps me grow this channel even more, and that is going to do it for me, guys. So again, thank you so much for tuning in. As always, I will see you all before the bell. And B. Smith is out. See you guys. Have a good one.